In this video, I'm going to be discussing red peaks, and I've got I got 6 examples that will give us a variety of information on how you deal with red peaks and what you're looking for when a red peak occurs. I've got 6 lines here, 6 vertical lines. Each one of them is a red peak. And again, just for clarification, so that you understand, a red peak by definition is zip red, and the zip red chart is right here in the middle. And the zip red is above 50 and the zip yellow is under 50, and they are both going up. That is the basic definition of a red peak. Conditions for a red peak would suggest that your short-term trend lines are going down, or at least under zero, if they're not going down. And just kind of clarification on when they're under zero, they're typically running flat. But when if they've been climbing and under zero for a few days, then that's typically something that you might not want to enter as a short position on a red peak, because red peaks are reversal down, price down patterns. This first one is on the right, on the red vertical line is a red peak, and that has zip red at 91 and zip yellow at 21. So we're literally 70 points apart, and that you know from other things, the higher the spread, typically the better. And so we're 70 points apart here. And one key thing that you see in this example is that zip green has remained at zero. So we have a green candle, and we have a day when people are leaving the market. And I suspect if we checked back on a 15-minute chart or 5-minute chart on that day, that we would find that at the end of the day, excuse me, the bulls just pulled it up fairly quickly. That's not a guarantee. I mean, I have no idea. I haven't even checked it out, but that's a possibility that might exist. And that really is immaterial to the situation, because relatively speaking, there were more people that left the market than entered the market. And this is a divergent condition if you recognize it. When you have a green candle with zip green at zero, it's basically a divergent pattern. If you look here in the trend red, in the trend chart, you also have trend red in an uptouch on zip pink. On trend pink, and that's a strong indication that you are going to be a next day down. And in fact, if you look at it closely, you have the 3 fast trend lines up and the 3 slow trend lines, the 3 the short-term trend lines, the trio, they're all down. Trend green is also in an uptouch on blue. And so this is a real good indicator that on a red spike where you'd want to buy one of these. You'd want to enter this position short. And in fact, it does gap down, as we can see, but there's here power Zion has peaked up over zero, and you'll see that that Zion, many of them do. In some of the classic gap down patterns, trend red down touches under zero, and trend green hits one of the other lines or the zero line and reverses back up. In this case, all three are up, and all the wide lines are down on the trend chart. And comparatively, Power Zion does this cross zero on a peak and then come back down rather frequently. And so I'll just bring that to your attention. If you go down to the swing chart, you got all three swing lines up, pink, yellow, cyan, with the gray line down. However, you got everybody in an uptouch. The pink line is uptouching zero, and the cyan and yellow are uptouching the green swing line. And so you got a lot of supporting evidence that would tell you that next day this red vertical line is going to go down. On the green line, you have again a red peak that qualifies. Zip red is at 94, zip yellow is at 44. So you're 50 points apart. And all your lines are going down except your trio line has come back up for one day, and that's because your trend red and green, your fast trend lines, have gone up. Red is up for the fourth day, and it ends up peaking in this particular case. However, next day, I mean, we obviously can't see next day, but next day we end up in a red-green twin peak, which is indicative of a downtrend, or at least a next day down. So even though the trio kind of started up a little bit, it's still under zero, and it qualifies as an acceptable downtrend. And when the market opened the next day, when we were starting to trade, it opened at 95.75, and its high was 95.77. So it went up 2 cents. It's also butting up against and hitting resistance on the blue line on the candle chart, which is your master long-term trend line. And it also is hitting the upper gray band line as well. So it's kind of, for me, this is one that's fairly easy to identify in a next day down. And I'll go on to the dark green vertical line. On this vertical line here, we have a nice downtrend on the next day down. We have a nice next day down because that's what the red peak and the red spike are. They're one-day patterns. You need to verify the next day if it, in fact, it's going to continue in a downtrend. So next day down on this red peak on this dark green vertical line, it significantly goes down. And here's another example. The red on this dark green vertical line day, the red zip red has bounced up over the top of your two wide lines, zip yellow and zip blue. And that's indicative of what I was just talking about in the first example, where zip Zion went over the zero line, and other examples that I pointed out. The other key things about this is that your trend trio is above zero going down, and your other groups, your short-term trend groups, trend trio, trend power group, and your swing group, all of those lines are going down. So we actually have 7 short-term trend lines all heading down, which is the best way to buy a zip, I said that wrong, best way to buy a red-green top. Now on that dark green line, one of the first things you're going to say to me possibly is that, well, wait a minute, your zip yellow is not down, it's at 80, and your zip red's at 87. Well, understand that again, if you've done any reading or listening to to red peaks or to red spikes, you know that they have a tremendous flexibility in their positioning. And so even though zip yellow is high, and it's high because your trend trio is high. I mean, trend blue looks like it's over 20 right there. And so that tells us that those factors tell us that things are going to go down. We also have power Zion in an uptouch on the power orange line, and then power pink is in an uptouch and Zion on the 0 line on that dark green vertical line day. The next three are again, all three are red spikes. I'll do the yellow one first because that is a real small, or let's say a smaller red spike. It also has a zip green at 0, and it has a green candle. Zip Zion has crossed over, I said that wrong, Power Zion has crossed over 0, but it's real high. It's not low like you typically might think of in a crossover going down. Even though it does go down, I just wanted to point out to you that it is fairly high. The swing red is about to cross under 0. It looks like on the next day. Excuse me, I'm looking at the wrong line. Swing red is under 0 with swing green, and they're going down. And what you don't know on the yellow vertical line A is how far the zip red is going to go down. If you're thinking about a typical red peak, it goes down quite far, 30, 40, 50, even 70 points down the next day. One of the things that you can look at here, and I'll compare the yellow line, the day before the yellow line you had zip yellow at 4, and zip yellow on the pink line went up to 11. So there wasn't a huge amount of increase in the difference between those two. And you might say to me, well, that's typical of a strong down day next day. And yes, in fact, just looking at the zip yellow line, that in fact might be true. With the exception that you got some diversity here in the trend trio. Its trend trio has been going up for about 5 days, and the price has just barely been moving up. Back to my indication on the zip yellow, now at 11, and before it was at 4. It went up 7 points. If you go over here to the red line and you go the day before the red line, vertical line, the zip red is at the zip yellow is at 1, and on the red line vertical day, the zip yellow is at 21. So zip yellow jumped 21 points on that day, and reflectively zip red also was significantly higher. I mean, zip red's at 91. But the difference between the zip yellow movements has a significant bearing on sometimes on your next day movements. That's not a proven way. I mean, both of them have zip green at 0. Both of them have zip Zion crossover 0. You got significantly more up touches on the red vertical line day than you do on the yellow vertical line day. But the primary thing in comparing these two are on the yellow vertical line day, you have the trend the trend trio lines up significantly. By that I mean many days up. They're still under 0, but they're many days up. That is not true with what's happening over on the right here with your 3 lines there. Your lines, your trend trio lines are all going down with the exception of your middle green line, but you have the other indications with the other 2 groups going down and Zip Zion on a peak real low. So these 3 over on the right are very strong in their indications for a downtrend. And this is kind of why I grabbed the example, because these 3 over here are not strong. Now, when you have the only one that is an exception to this, and keep in mind you've got, when I say this, there's 2 reasons for that. The pink vertical line has the lines are getting closer together. They're getting closer to 0, obviously, but there's no real strength in to anticipate that they would continue going up real strong. And that is noted especially in between your yellow line and your pink line. You have several bottom of cycle higher patterns. And we know from our bottom of cycle higher patterns on a peak, they have a high probability of reversing next day. And we have several of those patterns I think in almost every chart, in every subchart. We also have several bottle noses that go along with those in many of the subcharts between the yellow and the pink line. And so on the pink line, we got a lot of bottle noses, we got a lot of BOC higher patterns, which are indicative of a next day down. So out of the 3 that we talk about here on the left side, which are really not strong next day down patterns for the red peak pattern, the best of the 3 is the pink, or possibly the best, depends on how you look at it. Another factor on the pink line is you have the trend gray above the pink, so that's, you could say on the Zion line the trend is above the red as well, and look at what happens. You got a real weak line. So yes, in fact, that's not as much a factor, but it plays a little bit into it. Obviously, the number of patterns on the pink line between the bottlenoses and the bottom of cycle higher patterns are indicative of a stronger next day down than what we have in the Zion or the yellow lines, the yellow vertical line. The other key thing that you might take note of is on the swing chart. On the right, your red, green, and dark green are all 3 swing gray going down. And on your left, all 3 lines, pink, yellow, and Zion, are swing gray going up. And so again, the swing gray deep cycle chart tells you about what things are happening. Between the pink, yellow, and Zion lines, you actually have many days of congestion. Even though you can pick out the day as it's going down, I mean, obviously on the yellow line, if you didn't pick out the top of that cycle on the next day, you're not going to be making a whole lot of profit. And likewise, on the following day, you have that red doji candle, which is I mean, you can go either way on that, on red dojis. I mean, on the day after the yellow vertical line has a doji and price goes up, and 2 days before the yellow line, you got a red doji and price goes down. So you really can't tell a whole lot from a doji line, from a doji candle narrow-bodied candle is what a doji is, if you're not familiar with it. And so those are 6 examples of red peaks that I wanted to share with you. Take note also of where your zip yellow lines are in these examples. The dark green line has zip yellow way high, so it's probably going to go down, and the other yellow lines are at on the pink, yellow, and cyan. They're at the bottom. Not to say that they couldn't stay at the bottom, but you can indicate or get an indication of that on the trend trio chart. So I gave you, I just basically talked through these examples on how I looked at them, because I think that's one of the best ways for you to think about how you're dealing with these patterns and seeing which lines I gravitate toward, because those are oftentimes the stronger of the indicators that tell us what's going on. And so it's not always, how do I say this, you need to get familiar with how pattern movement between the indicators and the price react. That doesn't come with just viewing a couple of videos. You need some time to identify with how the sensitive indicators tell you what the market is going or not going to do. And so I really encourage you to think about the different indicators on what they're likely to do, because so many of these indicators are leading indicators, and we can't necessarily call them that, but their sensitivity gives us tremendous insight into what price is going to do in the next day and sometimes in the next several days, like the twin yellows, zip yellow and power yellow. When they're highest and going down, you usually got a longer downtrend, especially if your power yellow is high. So keep that in mind. I really encourage you. Oh, the other thing too is keep in mind where the candles are on your gray bands. If they're running along the top band or running along the bottom band. Again, it doesn't tell you exactly which way things are going to go. It's just another verification issue inside the entire system.